Most sir, if I start it now.
Okay. Hello. Good morning, all of you. Good morning. Hello. Now it is connected. Na? Okay.
Yes, sir. Yes. Now it is.
Okay. So, good morning, all of you. I am repeating what I spoke for few minutes. Actually, yesterday we have started the overhead and we have looked the very important part under absorption and over absorptions and how the treatment is given. Today we are looking for the machine hour rate. How to find out the machine hour rate and why? So in any machine shop there are several machines and we have to find out the machine hour rate for each of the machine. Why? Because all the machines are not same size, not the same value, not the same life, not the same occupy the space, not the same HP rating. So everything is different. So we have to find out the individual machine hour rate. So this is very simple topic and we will look very fast. So how to find out? So you will be given two type of expenses. One expense is called a direct expenses or a machine related, whatever in our study note it is mentioned machine related. So what are the expenses are machine related? You know that when you find the separate amount for each machine, that is called a machine related. And there are 5 expenses. One is value of the machine is always different. And based on value of the machine, two things we can find out is insurance and depreciation. That go in the category of value of the machine. Third, repairing of the machine is separate for all the machine because all machines are not same day repair. 4 is tools and consumable consumed by machine. That is also separate. And fifth, any specific expenses related to that machine may be a license fee or any other thing. So these are called a machine related expenses. Then other expenses are standing expenses or common expenses or indirect expenses. These you cannot directly relate with the machine. That needs to apportion. Example, there are again 5 expenses. One is rent. Rent of the factory is common and that will be allotted based on square area occupied by that machine. Second expense is supervision cost. Supervision normally common. One machine, one supervisor is not possible. One supervisor may take care for several machines. And in this case, how much time that supervisor allot to the particular machine, that may be considered. Third expense is factory overhead. Factory overhead is also common expenses. And that expenses needs to apportion on a given base. The base will be given. Fourth is electricity. Power is a machine wise, but electricity is always common. And that also needs to apportion. And last is administrative overhead or sundry expenses. This also apportion based on the given base. And ultimately we could find out the machine hour rate, total of the direct or machine related expenses and total of the standing or indirect expenses. This will be divided by number of machine hours. How to find out the machine hours utilized? So these are the simple. Per day, maybe 1 shift or 2 shift. The number of shift multiply by 8 hours, multiply by number of days in a month, multiply by 12. You will find the available hours in a year. But machine may not run all the hours. There may be some idle hours due to absenteeism of operator, power cut, breakdown, no material is available, no orders are available, whatever reason may be. So safely we is considered based on the past experience 20% is unutilized. So we reduce to the 80%. Suppose there are 2000 theoretical hours, we reduce to 80% and we consider only 1600 hours. And these expenses are divided by 1600 hours. And we could find out the machine hour rate. These are the good examples. There is no any typical or difficult point. Some important point we can discuss. Rest are the very simple. One important point is that for the depreciation, only typical point I am attending. So how to find out the value of the machine? If machine is imported, take the simple example. You also try what will be the amount of depreciation. I'm giving one simple example to work out. Machine imported 1 lakh US dollar. 1 lakh US dollar. Custom duty 20%. Custom duty 20%. GST 10%. Freight and packing rupees 1 lakh. Installation expenses 1 lakh. Scrap value rupees 5 lakh after 5 years life. What amount we will consider for this machine as a depreciation? So what will be the reply? So we consider the value of machine on landed cost. What is the landed cost? The machine arrived in the factory to put in use to start the production. To that extent, all expenses are landing cost. So here what happens? US dollar equals 70, assume. So what is the depreciation amount? So we work out 1 lakh US dollar means 70. The machine purchased at 70 lakhs. Purchase value. Add custom 20%. 20% means 14 lakhs. Total 84 lakhs. After arriving in India, GST will be charged 10%. So 8 lakh 40,000. Total amount 92 lakh 40,000. Plus packing forwarding 1 lakh. Plus install expenses 1 lakh. So the amount become 94 lakh 40,000. That is the landed cost. And that may be considered of the value of machine. Minus 5 lakhs scrap value at the end of life. So 89 lakh 40,000 divided by 5. And this figure will be considered as a depreciation value. This is an important point. Similarly, another point. There are several machines. How to consider that? I give one typical problem. There are 3 types of machine. I'm not taking a simple problem because you already learned during your class whenever you are studying. There are 3 types of machine. A is a big, B is a medium, C is a small. Number of machine in a factory, 2 big machine, 3 small medium machine, and 4 small machine. Total 9 machines are installed in the factory. The size or space, the big machine occupy double space than medium machine. Big machine occupies double space than medium machine, and medium machines occupy double space than small machine. The rent of the factory per month, rupees 1 lakh. How much you will allot for one big machine? You were to find out one big machine over rate. How much amount you will consider for one machine? So you understand, this is the point. There are 2 big machines in a factory, 3 medium machine, 4 small machine, total 9 machine. The space occupied by big machine is double than medium. Medium machine has a double than small machine, and amount of factory rent is 1 lakh. What should be the cost you will consider for one big machine? Think about it for 2 minutes. How to solve this matter? So after 2 minutes, we will start how to do this. So answer is very simple. So ABC means a big, medium, small. Assume that 1 square area is 1 square foot is required by small. So small 1, medium double means 2, big double means 4, because the ratio is given double. So space occupied by big machine is 8. 2 machine, 4 square, 8. Medium 3 multiplied by 2, 6. And small 4 machine, 1 square area. So 1 equal 4. Total 16. 16 equal 1 lakh. So one big machine occupies 4 square meter. So 4 means 1 lakh multiplied by 4 divided by 16. So 25,000. 25,000 is the answer. These are the point typically. So these are the things of the machine overhead. Rest point you know better than me because it's a very simple like how to allocate the supervision cost based on their time spent for a particular machine, rent also on area, factory overhead, you will be given percentage 10%, 20% for particular machine, depreciation and all are given or you can easily find out. So these are the things. And last part of the overhead is we are not going to solve the problem because you did many problem on it, allocation and apportionment. So overhead are given and you have to spend based on the apportionment wages are given. Example, depreciation on value of machine, insurance value of machine, electricity number of points, power HP hours, indirect expenses based on direct expenses, sundry expenses based on indirect expenses like this. So it is not a big thing. You know how to apportion it. After that, the overhead related to service department are again reapportioned to the production department and like this. So there is only one best example in your study note. You see the example number 6 of your overhead. There's the biggest, best example. Number of times this example have been asked, and you have to do this. I am today to send list is already prepared for chapter wise and page number wise example number that I will send to Manjari sir today. It is already with me. Open the example number 6. Now I say page number. The best example, only one example is enough. You need not to go for 1 to 7 example. Example number 6, page number 148. I have a 2018 edition. I am also looking 2019 edition, which is the page number. It is also on the same 2019 edition, also same number. Page number 148. Open this. I am not solve this problem, but I will read this problem for your understanding. You know it, I know that. So, in this example, what is this? Overhead are given, and everything. Additional information is given for the apportionment of all these expenses to all the profits, means the cost centers. How to allocate that, you know, you already allocated A, B, C, D, E. What is the important point in this? Take the rates. I will take only one expenses, not all, to understand it. You understand, still I repeat it. The rent is 5,000. You put here rent, basis is a space, total amount 5,000. How to allocate? By this way. And the total space area, you will total it 2,000, 2,500, 3,000, 2,500. So total is amount 10,000. If 10,000 is a space and O divided by B, B is a base is a space, O is overhead. 10,000 is a space, 5,000 is overhead. So each area is equal 0.5. That is called a multiplier, 0.5. And A machines, A department occupy 2,000 square feet. So multiply by 0.5, it is 1,000 already given. This is very simple. What is my important point and what students make the mistake is that here one important point is given for the production and service department, direct wages. Direct wages given, see the page number 149, item number 3. A department 3000, B department 2000, C 3000, D 1500 and E 500. How to apportion? Very important point which students make the difference. We are calculating overhead and not the direct material or direct wages. So ignore this. Ignore this. We cannot apportion to direct material or direct wages. So amount of direct wages 3, 2 and 3000 ignore in production department because direct wages only in production department. But they have also given the figure for D and E. These are the service department. How to do, what to do. Understand, direct wages will not be in service department. So whatever amount given is not a direct. Even it is given as a direct, it should be considered as indirect. So you put a note. You will consider this as an overhead for department D and E. Put a note. How to apportion? No question of apportionment. Figure is already given. So you put a note given and write down footnote. Direct wages in service department is not possible, so it treated as indirect. And in the production department, direct wages cannot be considered because it is a part of prime cost, not a. This is a very important point. After that allocation and apportionment of overhead, you need to repeatedly be taken and find out the reapportionment of these service department expenses to the production. That exercise you know, so I am not repeating. Similarly, there are two methods. One method is a repeated method and another method is simultaneous equation. So you can look it on the page number 150, how the amount is considered by applying the simultaneous equation. So you look on it, then I will explain how it is to be done. Look for a 1 minute. Try it. If you have not done it, do. This is a very important question they ask in the exam several times. You think solution is already with you, and I will also solve you after 1 minute. You look first. Try to understand. If you don't understand, I will explain. So page number may be different because different edition. If it is the latest edition, maybe plus, but the example is same. That is why I am speaking also amount also for that. Now look to the solution. What is the simultaneous equation is given? You have assumed service center D and E. D equal apportion overhead 4,625 and E 1575. So for E, D 4625 plus 10%, because the 10% service of D is given to E. So plus 10% of E. Similarly, E department get same amount 1575 plus 10% of D. So equation is this. D equal 4625 plus 10% means 0.1 of E. And first time you multiply by 100. So the figure become 100D equal 462500 plus 10E. 0.1 multiplied by 100 means 10. And for the second equation 100E plus 157500 plus 10D. Now for second equation multiply by 10. First time you multiply by 100 both the equation. Then the second equation come multiply by only 10. And when you put 10 and extract from 1 to second, so you will find 999E equal 2,07,3750. And E figure you will find out. And based on E, you can find out the figure of D. That you know. This example was asked in June 19 also. The same example from books. So these are the very important example for you can be repeat. So this is the very important. Later on, the absorption method also here given. So after repeated reapportionment, you find the figure for the service department to production department. Final figure for production department 9390 1200. Divide by number of hours is a B, 9339 is O, and you find the rate 1.5, 2.25, and this rate is applied for overhead. See the next page, page number 150. Material is given 50 rupees, labor 30, and overhead you have to work out. The order passed through three department A, B, C. You have a rate 1.5, 2.25, and 3, and also you are given the hours required for department A, B, C, and you add the overhead and total cost. In short, example number 6 is the heart of the overhead. You could not solve any other problem, don't worry. This covers the entire problem, all the point, including simultaneous equation. And be sure you should understand sign computation. If you have any doubt about it, how it's solve it, tell me. So there are the two way. First put the equation, multiply by 100 both the equation 1, equation 2, and later on multiply by 10 only second equation, and remove the x and remaining only y, means E, and you will find out. Try to solve it very specifically. So by this way, we are ending the chapter of overhead. If you have any doubt, you can ask it. Today I am to send the number of example, which you have to do. Total example you have to do not more than 65 from study note. Even it is given 150, forget about it. And the list I am to send today. But the 6 number example is very, very important. You need not to go first 5 example. 6 example cover all the first 5 example. So the overhead is over. Now the material is over, labor is over, overhead is over. The longest chapter in the study material is overhead. Now we come to the other type of problem, integral, non-integral reconciliations and cost accounting standard. Cost sheet you know better than any other person because you all study. We come to the point of the non-integral accounts, which is called a cost accounting. Now, if you don't know the cost accounting means non-integral, you may not able to solve any problem of the integral accounts. Now understand the theoretical part. There are only 3 important points. The first important point is, it is not compulsory for any company to keep accounts as per the costing. But as per the financial accounting, it is a compulsory. Point number 2. Many transactions are recorded, even it is not economical transaction. It's simply one place to another place. Cost accounting transactions are come. How? When material issue from stores to production, in cost accounting transaction is required. But in financial accounting is not required. Why? Can you understand why? A material stored in stores department is issue for production, entry pass in the cost accounting, but not in the financial accounting. Why? What is the principle behind it? What is the principle behind it? Second example, when material is finished from WIP to finish and it deposited in store department, finished goods department, it is entries pass, but not in a financial accounting. Why? What principle behind it? You can think it. Very important point. Why entry pass in cost accounting and not entry pass in the financial accounting? So you may not be able to give the answer because you do not have experience. The answer is simple. Financial accounting entries are only recorded in the books when the ownership change. When you purchase the material, ownership change from buyer to you. When you sell the material, ownership is changed from you to buyer. But in this case, entries ownership is not changed. When material move from one department to another department, ownership is not changed. That is why no entry in financial accounting. Simple. But in cost accounting, accounts are divided by centers, cost centers, process center. So it is a raw material converted in finished goods, and material move from store to production, production to finished goods house. So entries pass, but not in financial accounting. So financial accounting given the weightage, the ownership, cost accounting, cost center. This is the basic. And third, there will be always difference between the profit of financial accounting and cost accounting. And this difference must be there. And one has to explain why this difference is, and that is we call a reconciliation. So profit as per financial accounting 10 lakhs, profit as per cost accounting 12 lakhs. And when we explain this difference, it is called a reconciliation. So anyway, if there are two separate stat, financial and costing, reconciliation is required. Now, This is the important point. Now it is called a cost accounting bookkeeping. That is called a financial accounting. So financial accounting compulsory, cost accounting optional. Now, when the two sets are combined, financial accounting and cost accounting, it is called integral accounts. So you may not keep separate accounts for finance, not for costing. What are the possible benefits? Can you think when both the accounts are combined? This is a theoretical question many times asked. Integral accounts. What are the benefits of integral accounts? Anybody can guess? Simple. There are three benefits. Number one, saving of time. You need not to keep two accounts separate. No audit is required. If you have a two separate set, both the accounts are to be audited. And these are not much important. What is the only important? If you don't write this point, you will not give it marks. That point is reconciliation is not required. Why? There is no difference profit. If there is no different profit, no reconciliation is required. The single line answer in integral accounts, reconciliation is not required. Then question, what is a reconciliation? Why reconciliation required? We see that when there are the two separate books of accounts, reconciliation is required. Now again question, why? Why? Can you imagine why reconciliation required? Why two sets of accounts are different? And what are the reasons that made possible or compulsory to do the reconciliation? There are 5 important points why reconciliation is required. You have to remember those points very minutely and accurately. Think about which are the 5 points that needs reconciliations. I give you 1 minute to think. You may not give me answer, but you think about it and then I will speak. So you can match your answer with my answer. Think about for 1 minute. So answer is very simple. The reason for reconciliation, number one, certain expenses appear in financial accounting, particularly pure financial expenses like interest on debenture, preliminary expenses written off, bad debts, all are recorded in financial accounting but not in cost accounting. Number one. Point number two. Several expenses are considered in cost accounting but not in financial accounting. Example is notional expenses. Third point. There is always difference between financial accounting set and cost accounting. Example, overhead. Factory overhead as per financial accounting may be 1 lakh, but in cost accounting 1.2 lakhs. Why? Because in financial accounting, expenses are recorded after incurring, means actual. While in cost accounting, it is always before incur, and that is called estimated. And there is always difference between estimated and actual. Point number 4. Stock valuation amount is always different in both the sets of accounts. And last, other income, always in the financial accounting, but not in the cost accounting. What is other income? Dividend. Is the rent received by the company. So these are the 5 ready answers. Some expenses are in costing, but not in the finance. Some expenses finance, but not in costing. Third, the figure are different. 4, method of stock valuation is different. And 5th, other income. These are the 5 reasons is creating the reconciliation statement. Now come to the practical problem. There are 3 types of questions: non-integral, integral, and reconciliation. What is the sure? Only one thing is sure. Only one thing is sure. Minimum 10 marks questions come from these 3. Maybe reconciliation, maybe integral, maybe non-integral, if you refer any paper. So this is a very important part of your study. Now we look the very fast the non-integral. You know how the entries pass. There are 5 areas. These 5 areas I just detect the journal entry, not recorded, not a problem is required. We solve in integral accounts. The 5 area, 1 is material, 2nd is wages, 3rd is overhead, 4 is production, and 5th is sales. Clear? So in material, it is just a revision, you know that. So in material, there are again 5 sub-entry. Which are the 5 sub-entry? Material purchase, material return, material issue, material return from issue, and material lost. What are the 5 entries? When you buy the material, you may write material control account debit. Here all accounts entry are passed by control. If you don't write material, don't worry, it is stores control. Whatever, both are the same, material and stores. So in material 5 entry, when you buy the material, material control account debit to general ledger control account. What is general ledger control account? In absence of debtors, creditors, cash, and bank, the word is used general ledger control account. So first entry, when you buy the material control account debit to general ledger control account, we shortly call it JLC. Point number 2. When issue the material for product, when we return the excess material, reverse the entry, general ledger control account debit to material control credit. When we issue the material for production, WIP control account debit to material control. 4. When returned from this production department, reverse the entry, material control account debit to WIP credit. And last, when we lost the material, material is fired, material is stolen, material is destroyed, it passed to the costing profit and loss account debit to material control. Now, entry related to wages. First, when we paid the wages control account debit to GLC. Then these wages are analysis in direct and indirect. Direct part goes to WIP. So WIP to wages. Indirect part goes to the overhead. Factory overhead debit to wages control. Administrative overhead to wages control. Marketing overhead to wages control. Third, overhead. Overhead, there are two types of entry. Overhead paid, overhead recovered. When paid, all entry are debited to GLC credited. Factory overhead debit to GLC credit. Administrative overhead debit to GLC credit. Marketing overhead debit to GLC credit. When we recover, reverse the entry. All we debited become credited. So if it is a factory overhead, WIP to factory. When it is administrative overhead, finished goods control account debit to administrative overhead. And when it is a marketing overhead, cost of sales to marketing overhead. This is the third area. Fourth area, when produce the material, the finished good debit to WIP credit. And last area is sales. Sales are recorded by two ways, cost of sales and sales value. When it is the cost of sales, entry is simple. Cost of sales account debit to finished goods credit. And when it is sales at a market value, GLC account debit to costing profit loss credit. If you remember this entry, then it is possible to have a integral accounts. It's clear. I'm not giving you any exercise for that, you know it. Other examples are of integral, and we do some example on it. What is the integral accounts? When both the sets of accounts are combined, it is called integral accounts. And how to pass the integral accounts? The most easiest part is integral account. How? Remember the two things. Here also three types of entry. Some entry pass right in both the accounts. Example, purchase of material. Some entry written only in cost accounting. Example, issue of material. Some entry only in financial accounting. Example, payment to the creditors. Clear? Three treatment, always remember. Those entry pass in the both the accounts. Those entry pass only on the cost accounting. Those entry pass only in the financial accounting. Those entry pass only in one set of accounts, it become integral. No need to do anything. Simple. Now the questions. If the entry pass in the both the accounts, what to do? How you test it pass in the both the accounts? Simple. When there is a GLC, you take up first cost accounting. If any entry having the GLC account, it must also pass in the financial accounting. Example, purchase of material. So in cost accounting, entries like this, material control to GLC. So it must pass in also financial accounting. If not possible, it will not pass. So what is the entry in financial accounting? Material purchase to creditors or cash, whatever may be. So test is simple. Second entry, you take the material issue for production. There is no GLC, so no entry in financial accounting. Example, WIP to material control. No GLC, no entry in this. After the GLC entry, what is the answer? Is simple. Remove the GLC and replace the entry of the financial accounting. Case is over. This is simplest example. I'll give you one example. Material purchase on credit, 1 lakh rupees. What is the entry in cost accounting? Material control account debit to GLC credit. Now the same entry in finance. What is the entry? Material purchase account debit to creditors. Now remove the GLC. So material control remaining same, GLC is out. Replace the GLC by creditors. Corresponding entry. So integral entry is like this: material control account debit to creditors. Simple. There is no much rules. Similarly, take the example: administrative overhead recovered. What is the entry in cost accounting? Finished goods to administrative overhead. And there is no GLC, so no entry in finance. Okay, matter is closed. Itself is a integral. But sometimes the entry only in financial accounting. How you come to know in financial accounting? You know which entry come in cost accounting. Example: machinery purchase, it never come in cost accounting. Payment made to creditors, never come in cost accounting. Amount recovered from debtors, never come in cost accounting, only financial accounting, and itself is a this. So now take a simple example. You may write down the 6 entry. You solve yourself. Later on, I will give the answer, so you can see what will be the answer. Now write down the 6 entry. The first entry: material purchase. Material purchase rupees 10 lakhs, 80% on credit. Item number 2: payment made rupees 5 lakhs to creditors. Rupees 5 lakhs payment made to creditors. 3. Sales 10 lakhs, 70% credit sales. 4. Received from debtors rupees 5 lakhs. 5th, material issue for production 20 lakhs. 6. Machinery purchase rupees 5 lakhs. 7. Factory overhead paid rupees 9 lakhs. 8. Factory overhead recovered 8 lakhs. 9. Production rupees 25 lakhs. And last entry: wages paid rupees 20 lakhs. Try yourself this 10 entry in the books of integral accounts. You may not speak, I will speak the answer, but think about it. If you can write in your notes. Otherwise, I will also explain the answer. I give you 3 minutes to write it out.
Now look to the point. We will solve one by one. The first item, material purchase. What will be the item in cost accounting? Look first cost accounting. So item is like this. Material control account 10 lakhs to JLC 10 lakhs. What it means? It means the entry will definitely come in financial accounting. What entry will come in financial accounting? Material purchase account 10 lakhs to creditors 8 lakhs to bank 2 lakhs. Clear? Now what is the integral? Remove the GLC from costing. So take the integral as a cost accounting. So material control debit 10 lakhs to replace the GLC, creditors 8 lakhs and bank 2 lakhs. First entry, integral entry, last entry, there is answer. Answer is material control 10 lakhs to creditors 8 lakhs to bank 2 lakhs. Item number 2. Payment made 5 lakhs to creditors. Entry in costing is not there. The same entry is integral. Creditors account debit 5 lakhs to bank account 5 lakhs. Item number 3. Sales rupees 10 lakh. 70% credit.
sales. What is entry in costing? GLC 10 lakhs, 2 costing and profit loss 10 lakhs. This is the entry in the cost accounting. When there is a GLC, there must be entry in the financial. What is the financial entry? Data 7 lakh, bank 3 lakhs, 2 sales 10 lakhs. Remove the GLC. So data 7 lakhs, bank 3 lakhs, 2 costing profit and loss 10 lakhs. Next entry. Received from debtors 5 lakhs. No entry in costing. So same entry in integral. Bank account debit to debtors account credit. Next. Material issue for production in costing WIP to material control. No GLC, same is integral. Machinery purchase of rupees 5 lakhs. No entry in costing, same entry is integral. Machinery purchase account debit to creditors. Factory overhead paid 9 lakhs. In costing, factory overhead control debit to GLC. When there is a GLC, entry will also pass in the cost accounts. Factory expenses debit to bank account. Remove the GLC. So factory overhead control account debit to bank account. Similarly, factory overhead recovers 8 lakhs. In costing entries like this, WIP account debit to factory overhead. No GLC, same is integral. Production rupees 25 lakhs, entry in costing, finished goods 25 to WIP. No GLC, same is integral. Wages paid rupees 20 lakhs. Wages controlled to GLC. When there is a GLC, entry also pass in finance. Wage expenses debit to bank account. Remove the GLC, so wage control to bank. These are the integral accounts. These are the topic, don't work hard. Try to understand it. And last topic of the same section is reconciliation. Many students I have seen they're confused. But it is the most easy. How to prepare the reconciliation? I will show you a simple trick. Under absorption, over absorption, everything you forget. Only 3 column: finance, costing, difference, or costing, finance, and difference, and you can find out. I give one simple example, not much entry, and we will do this example. Even it takes 10 minutes. Don't worry. If you do this only one example, you can solve any of the example in the example. So for this, I'm giving a simple whole line example, then we will go for study material. For understanding like this, write the financial accounting. Not much item, very few item I will give you. Financial accounting, profit and loss. Profit and loss as per finance accounting. On credit side, put sales 50 lakhs. Credit side 50 lakhs. WIP 10 lakhs. Finished goods 20 lakhs. Other income 20 lakhs. Total 100 lakhs. Total 100 lakhs. Debit side. Opening WIP 30 lakhs. Opening finished goods 20 lakhs. Material 10 lakhs. Wages 10 lakhs. Factory overhead 10 lakhs. In interest on debenture 10 lakhs. And difference is a profit. Difference is, sorry, add two more item. Administrative overhead 5 lakhs and marketing overhead also 5 lakhs. So WIP reduced to 20 lakhs. So 20, 20, 40, 50, 60, 70, 80 and 90. So profit is 10 lakhs. I again repeat this very important short example. Sales 50 lakhs, WIP 10 lakhs, finished goods 20 lakhs, other income 20 lakhs, total 100 lakhs. You put figure 2010, not full figure. Debit side, WIP 20 lakhs, finished goods 20 lakhs, material 10 lakhs, wages 10 lakhs, factory overhead 10 lakhs, interest on debenture 10 lakhs, administrative overhead 5 lakhs, marketing overhead 5 lakhs, total 100 lakhs. Costing data. Opening WIP 15 lakhs, opening finished goods 12 lakhs, closing WIP 12 lakhs, closing finished goods 18 lakhs. Administrative overhead 3 lakhs, marketing overhead 2 lakhs, and factory overhead 12 lakhs. Prepare both the sets of profit and reconcile it. These are very important example. You have to understand and you can solve any of the problem. Now prepare the cost sheet to find out the profit. Simple. So cost sheet is like this. Now you have given the problem, I will solve it. So there must be two sets of profit. If profit given as per finance, good. It is not given, we have to find out. Profit as per cost accounting is not normally given, we have to prepare the cost sheet. When we have both the sets of accounts with profit, then it is possible to reconcile. So second set is not given, we will solve it like this. How to prepare the cost sheet? Simple. Material cost, data given for costing is the only difference, otherwise all the other data we take from financial account. Material 10 lakhs, labor wages 10 lakhs, 20 lakh prime cost, plus factory overhead. From costing it is 12 lakhs, plus opening WIP. From costing, not from finance. From costing, opening WIP 15 lakhs. Less closing of WIP from costing 12 lakhs minus. So we have a factory cost. This amount to be 20 plus 12, 32 plus 15, 47 minus 10, 12. 47 minus 12, 35. Factory cost is 35. Plus administrative overhead 3 lakhs. Plus opening finished goods as per costing 12 lakhs. Less closing finished goods as per costing 18 lakhs. This way. So this is the cost of production. This amount 35, 338, 38 plus 12, 50, 50 minus 80, 42. The cost of production is 42. Plus add selling overhead or marketing overhead 2 lakhs. So 44 is the cost of sales and 50 lakhs is a sales. So 6 lakhs is a profit. So you are certain the profit, you can easily prepare the cost sheet that I know. It is not much important. Important is the reconciliation statement, the easiest method. So we have two sets of accounts. As per financial accounting, it is 10 lakh. As per the cost accounting is 6 lakhs. So again, we see that there should not be any mistake. 50, 10, 60, 20, 20, 40, 50, 60, 70, 80, and 90. Okay. Now, how to prepare the reconciliation? So you start with either financial accounting or cost accounting. You decide. It is not important. Anything you can do. We here take financial accounting. So write down the first item as per financial accounting profit rupees 10 lakh. This is line you have written. As per financial accounting profit 10 lakh. Now we have a 4 column. The first column particulars. Second, as per finance accounting. Third, cost accounting, and then difference. Difference will be added in 10 lakhs, plus or minus. What is the rules? Rules is very simple. Write down the item in both finance and costing. Then minus from finance to costing. Why? If you consider the finance accounting as a base, so minus from finance. If you consider the cost account, then put the first column is costing. But here finance. Finance minus costing. If it is a plus, then add. If it is a minus, then minus. No other rules. Now take the example for debit side or the entry. Opening WIP. Opening WIP as per finance 20. As per costing 15. So 20 minus 15. So this is the plus. So add 5 lakhs plus. Plus 5 lakhs. 10 lakhs plus 5 lakhs. Put the simple entry, no confusion, nothing under absorption, over absorption, forget everything. Put one by one item of all the debit side of profit and loss. Opening WIP finance 20, costing 15, difference 5 plus. Opening finished goods 20, in cost accounting 12, so plus 6. Third entry, material no difference, labor no difference, factory overhead. Factory overhead as per finance 10, as per costing 12, so minus 2. So put minus 2. Interest in cost finance accounting 10, there is no entry in cost accounting, so add plus 10. Then administrative overhead. Finance 5, costing 3 plus 2. Marketing overhead. Finance 5, costing 2 plus 3. So debit side is over. Fine. Don't worry about it. Now take the credit side. Sales, same figure, no problem. WIP, as per finance 10, as per costing, opening WIP, closing WIP as per finance 10, closing WIP as per costing 12. So it is minus 2. Always change the sign from credit side. Debit side 1, whatever it come, but if when you start the credit side, change. So 10 minus 12 is a minus, but you change the sign, so plus 2. Finished goods. Financial accounting 20. Cost accounting 18. So it is a plus. Change the sign. It will be minus 2. Other income. Finance 20. Costing nil. So it should be plus 20. Reverse the sign. Minus 20. All entry are over. Now automatically profit as per costing will come. Simple rules. So the answer will be like this. 10 plus 5, 15. 15 plus 8, 23. Minus 2, 21. Add 10. 21 plus 10, 31. 10 plus 15, 18, 21. 23 minus 2, 21, 31, 33, 34, 36, 36 minus 2, 34, 34 minus 20, 34 minus 20. Right, it should become as per the profit. Again, we will see if there mistake. Sorry, there is a mistake in cost accounting. Profit is 16 lakhs. Profit is 16 lakhs, not 6 lakhs. Total was mistake. Factory cost 35 plus 3, 38 plus 12, 50, 50 minus 18, 32. 32 plus 2, 34 and 50, 16 lakhs. So it should become 16 lakhs. Now we tally. 10 plus 5, 15. 15 plus 23 minus 21, 31, 33, 36 plus 2, 36 plus 2, 38, minus 2, 36 and minus 20. So 16 is tallied. So profit as per cost accounting 16. Clear? These are the simplest way to do it. Now there is no confusion.
Sir, your voice is not clear, sir. सर आवाज नहीं आ रहा है.
आवाज नहीं आ रही?
आवाज नहीं आ रहा है.
नहीं आ रहा है. एक मिनट सर.
Sir, your voice is not clear, sir. सर आवाज नहीं
आ रहा है आवाज अभी? आ रहा है वॉइस?
Yes, sir. Yes.
Okay. So the reconciliation statement is like this. You prepare like this. They start with the financial account in 10 lakhs. You put all the figure, finance costing difference. From debit side, all the item. You take finance costing. If it is a plus, put plus. If it is a minus, put minus. Then it will be credit side. Both the figure put. If it is a plus, change the sign minus. If it is a minus, put the for and automatically reconcile is there. Now I give one more simple example. You prepare your own reconciliation. And then we will see this is very important example they ask. Most of the time reconciliation is asked. So I'm not giving much example. I'm giving the cost sheet and the profit and loss both, and you prepare the reconciliation. Very few item I will give you. Profit and loss account. Opening WIP 2 lakhs. Opening finished goods 3 lakhs. Material 10 lakhs. Wages 10 lakhs. Factory overhead 10 lakhs. Administrative overhead 10 lakhs. Marketing overhead 10 lakhs. And interest 10 lakhs. And profit 35 lakhs. So this side 100 lakhs. On credit side, sales 70 lakhs. Other income 25 lakhs. Finished goods 2 lakhs. And WIP 3 lakhs. Total 100 lakhs. I am giving also cost sheet. Material 10, labor 10, so prime cost 20. Factory overhead 15. opening WIP 5, closing WIP 2. So 10 plus 15, 35, 40, 40 minus 2, 38. Plus administrative overhead 8. Opening finished goods 8. Less closing finished goods 8. So the total figure 46. Plus selling overhead 4. So cost of sales 50. Sales 70, profit 20. So I am again reading the cost sheet. Material 10, labor 10, prime cost 20, factory overhead 15, opening WIP 5, closing WIP 2, so it is 38. Plus administrative overhead 8, opening finished goods 8, closing finished goods 8, total 46, plus selling overhead 4, cost of sales 50, sales 70, and profit is 20. Now prepare the reconciliation statement. Very important part. Prepare the reconciliation on, then we will solve this. Prepare the reconciliation statement. So now we will solve this. Just you have to prepare the reconciliation statement. All the figure as per the financial accounting and cost accounting is already given. Prepare the reconciliation statement like this. Particulars, cost accounting will place later on. First finance, then costing and difference. Opening WIP as per financial accounting 2, cost accounting 5. So all debit side, same side. 2 minus 5 minus 3. Finish opening, finish goods 3 and 8. So it is minus 5. Factory overhead 10 and 15. So minus 5. Administrative overhead 10 and 8 plus 2. Marketing overhead 10 and 4 plus 6. Administrative over 10 and 8 plus 2. Marketing over 10 and 4 plus 6. Interest 10 and 0, so plus 10. Now come on credit side. Other income 25 nil, so this is plus, change the sign because it is a credit side, minus 25. Finished goods 2 and 8, it is minus 6, so reverse plus 6. And WIP 3 and 2, so it is plus, so reverse the minus 1. And automatically 20 lakhs will come as per the costing. This is the thing. Now look to your study material. This is very important questions. The number I give you, you see it, not solve it. If you want to solve it, take times, but look to the problem and think how it is done. Then we'll switch over to new chapters.
Sir, can you please speak little louder, sir?
Yes, definitely. So, you understand this problem which I solved, everyone? Okay. Now, see the question number. Question number 11. You look on it. Don't solve it, but how the answer is coming, how the reconciliation is made. You made this way, not like books way. I give you 5 minutes. You look the entire questions, plus minus karke. Then we will switch over to new topic. This is very important example. You will have to solve at home. I have put this note. First, solve this 11 number problem. 11 number problem. You go through each entry. If you will not solve in your note, no problem. But try to understand any difficult point or any other things. પછી રાખજે ને વાર જાય છે આટલું. અહીંથી વાળવાનું છે. કયું મૂકી દે નહીં. Okay, now we will solve this problem number 11. There are the 3 points you require. One is profit as per cost accounting, profit as per financial accounting, and then merit reconciliation. So in the given problem, you have been given the profit as per financial accounting 69,000 clear. You have to prepare the cost sheet. Cost sheet how to prepare? You know that. So this is already given the cost sheet. See the solution. Material cost 7,08,000 plus direct wages become prime cost. Both the figure are given. Then works overhead. Works overhead figure is not given, but you are given some instruction. Works overhead have been charged to work in process 20% of prime cost. So 20% of 10,79,000 amounts to be 2,15,800. So this is the factory cost. Plus WIP opening less closing IP minus. So opening WIP is not given, forget. Closing WIP is already given. That amounts to total of these three 17,000, 8,000 and 5,000. Total 20, 30,000. So closing WIP already given, opening is not given. So it became a factory cost or works cost. And administrative overhead. Here administrative, how to calculate is given. Administrative overhead have been recovered rupees 3 per unit finished units. So how many units are finished that we have to work out. So it is given 30,000 units are sold. Opening is not given, but closing is given. 1,000 units lying in stock 1,000. So 30 plus 1, 31,000 units are produced. And 31,000 into 3, 93,000 rupees is a work administrative overhead. Plus at opening finished goods, which is not given. No worry. Less closing finished goods. It is not given. 40,000 finished goods as per finance. But for costing, we have to work out what is the finished good. So we have the figure. Cost of production 13,57,000 divided by 31,000 multiply by 1,000. So figure will come. The cost is 13,57,000 is the cost of 31,000. 30,57,000 divided by 31,000 multiply by 1,000. And this 43,800 rupees figure will come. That is the finished goods, which is also mentioned here 31 lakh 30,57,800 divided by 31,000 multiplied by 100. Then this is called a selling overhead. This is called a cost of production plus selling overhead, which is given here. It is rupees 4 per unit sold, and unit sold is 30,000. 30,000 is 4 1,20,000, and then it is a cost of sales. So profit is 66,000. Now this example is very important to understand fundamentally. So now 66,000 is profit, and here profit is 6. How to reconcile? Take one by one item. You can easily solve it like this. I am taking this. First, take the debit side. Material, no difference. Wages, no difference. Works overhead, 2,13,000 as per finance. And as per costing, works overhead is 2,15,018. Put this. First, you put all the figure. 2,13,000, 2,15,000 as per finance, as per costing. Then put the plus minus. Then second item, administrative overhead, 95,500 as per finance, and as per costing, 93,000. Then selling overhead, 1,13,500 as per finance, and as per costing, 1,20,000. Then no other item on debit side. Now come to the credit side. Sales, same. Finished goods, 40,000 as per finance, and we work out here the finished good as per costing, 43,800. Other item is closing WIP. Closing WIP, both in same, 30,000 and 30,000, no difference. And there is no other income or any other thing. But now prepare the reconciliation. Here 69,000. Now see one by one item. The first item, 2,13,000 minus 2,15,800. So it is a minus 2,800. Second item, 95,500 minus 93,000. So it is plus 2,500. Take the other, 1,13,500 selling overhead minus 1,20,000. So 6,500 minus. And last item, 40,000 minus 43,800. So this is the minus, but we have to change the sign. So credit side. So this is the plus 3,800. Now reconcile. 69,000 plus 2,500 plus 3,800 minus 2,800 and minus 6,500. So it is tallied. Costing profit 66,000 come. So take this example is very important example. Now you hear me now very well. Okay. Now we switch over to new chapters. That is the batch costing. Before that, within the 5 minutes, I take one more chapter. That is absolutely theory, but very important chapter. that chapter minimum you will get 2 or 3 marks objective. That is the cost accounting standard. Don't read the whole chapter. It is meaningless to read you. Meaningless to read you. I will describe in 3.5 minutes. What is the cost accounting standard? Cost accounting standard are set by Institute of Cost Accounts of India. Particularly, these standards are compulsory applicable in the cost audit. What do we read out of it? There are several pages. Only 2 points you will read. Number 1, what are the objective of the cost accounting standard? You will open the page number 172. 172, objective and function of the cost accounting standard. What I am telling you, only for 2 marks or 3 marks, don't read more than 5 minutes. So open this. It is a long written 2 pages. Page number 172, 173, objective of and function of the cost accounting standard. What are the objectives? If you read all these 24, you find only one verse. There are only 3 objectives. Don't read again. 1. First objective is uniformity, means everyone should be uniform. Consistency and accurately measure the cost. Which cost? Maybe material, maybe labor, maybe overhead. We are not concerned. So objective, you keep in mind only 3 objectives: uniformity, consistency, and accurately measure the cost. And second point, what you will remember? You may not remember full. The cost accounting standard, one is classification of cost. Cost accounting standard is
सर आपका वॉइस क्लियर नहीं सर. सर वॉइस इज नॉट क्लियर.
not clear.
नो सर.
एक मिनट. Now you hear me? Now clear voice?
Yes sir, yes. Now it is clear.
Okay, so I am again going this topic, 2 minutes, which I told. So this topic is very important only for 3 marks. Don't read more than 3 lines, more than 3 minutes. Again, understand cost accounting standard are set by Institute of Cost Accounts of India, which is a compulsory application for the cost accounting preparations. Cost records preparation, every company has to follow the cost accounting standard. There are 24 cost accounting standard. What question they ask, understand? There are only 2 questions. Number 1. One question is what are the objective of the cost accounting standard? So if you will refer all the 24, which is given on the page number 172 and 173, answer is same. There are only 3 objectives. 1, uniformity. 2, consistency. And 3, accurately measure the cost. Which cost? Whatever may be, material, labor, overhead. You read this. Objective. To bring the uniformity, you refer CA2, CA3 or any other thing. To bring the uniformity and consistency in the principles and methods to determine the of the capacity with the reasonable accuracy. If you refer 6, to bring the uniformity and consistency in the principles and methods of determining the material cost. So instead of going different, you write only 3 points. Accurately measurement of the cost. Cost means what? If it is 6, it is a material. 7 is a labor. 8 is a power. 9 is this. Clear? Understand? What they ask in a multiple choice or in fill the blanks or match number. How you remember all 24 number? I will show a simple way. Take the example, it is given, suppose the 24, what they have written? Cost accounting standard on treatment of revenue in cost. If you refer the 20, cost accounting standard on royalty and technical know-how. Cost accounting service accounts, selling and distribution. Don't remember like this. Only one word, because words never repeat in any 24. So you underline and remember. Like how to remember, I show you simple way. 1, classification. Don't write cost because it will be given in your questions. 1 is classification, 2 is capacity, 3 is production, 4 is captive consumption, 5 is transportation, 6 is material, 7 is employee, 8 is utility, 9 is packing. Don't write the packing material cost. You remember only packing. 9 is packing. 10 is direct expenses, 11 administration, 12 is repair, 13 is service, 14 is pollution, 15 is selling, 16 is depreciation, 17 interest, 18 research, 19 joint cost, 20 royalty, 21 quality, 22 manufacturing, 23 overburden, and 24 revenue. Remember only words, not the sentence. It will be easy for you remember. List out only words, repeat twice, and you remember. So this chapter is over. Now come to the base costing. Cost accounting is over. Now come to the base costing. Here we will start with the EBQ. These are very simple examples. Similar line on the EOQ. What is the difference between EOQ and EBQ? Understand. EOQ stands for economic order quantity. When you place an order, means when you purchase the material, which lot, which size is most economical, that you will find out by EOQ. Similar, how many item you will manufacture, means how much batch you will take for manufacturing, that is called a EBQ. Suppose your production at the annual is 1 lakh units. How many times you set the batch? Maybe 10,000, maybe 20,000, any size of you can take. But every time you change the batch, it costs you. And that is called a setup cost. Setup cost is very, very important, like order cost. More you order, more you have to bear the cost. Similarly, more frequently you change the batch, you have to every time set it. So that is the setup cost. So it is similar to it, very simple, but we have to do it. This example number of time asked. So formula is same. Square root 2AO divided by C. This is for EOQ. Here 2AO will out and S will come. S means setup cost. Square root 2AS divided by C. C remaining carry cost. Now explain. Square root means square root, 2 means 2, A means annual demand, that remaining same. Instead of order cost, here comes setup cost. Setup cost for each time, like each order. And carrying cost means how much you will hold your production in stores or in factory, that carrying cost. Carrying cost always per annum. In the earlier case, you will give a purchase price, and based on purchase price, you can find out carrying cost number of percentage. Here also you will be given manufacturing cost or directly you will given the holding cost or carrying cost per unit. Simple. And here are also various options available to you. Okay, which size you will take, 2,000, 3,000, 5,000. So you will find out based on calculation. In earlier case, PC, OC, CC equal TC. Here PC is out. OC will replace by SC, setup cost, plus carrying cost. SC plus CC equal TC, and whichever low you accept. The two example will be enough for that batch costing. So write down the one simple starting example. That will give you practice, and then we'll switch over the other type of problem. Write down the example. Annual demand 12,000 units. Setup cost means per setup rupees 200. Carrying cost per month rupees 2 per item. Annual demand 12,000 units. Setup cost rupees 200. Carrying cost per month rupees 2 per item. Now you are required one. What will be EBQ? And second, if batch size will be of 3,000 units, what will be extra cost? And these are the two important, all cover is there. So we will solve this. In this question, formula we know 2AS divided by C, EBQ equal. So what will be the answer? 2 means 2, annual demand 12,000, setup cost 200, divide by, what is the divide by? Carrying cost rupees 2 per item per month, but it is always annual, so 12 into 2, 24 rupees. So our answer will be like this, 12,000 into 2 into 200 divide by 24 and then square root. So, sorry, 2 into 12,000 into 200 divide by 24 and square root. 448. This will be the EBQ. You can also work out that square EBQ come 448. Now clear? Now the first answer is very clear and very simple. Second question they want, instead of 448 batch, they want to start the batch of 3,000. So it will always additional cost. What amount of additional cost you have to bear? That we have to work out. So that work out like this. There are two options, as per EBQ and as per requirement. So under EBQ amount is 448 and here 3,000. What cost we add? Setup cost and carrying cost and total cost. If total cost is more, how much it is more, that we have to know. If it is less, it is acceptable. So in first case, what is the setup cost? So our batch EBQ is 448. So how many setup is required? So one setup is 448 quantity, and our annual demand is 12,000. So 12,000 divided by 448. It means we require 27 setup. 27 setup is required. And 27 setup multiplied by 200 means our setup cost 5,400. In the EBQ base, we require 27 setup. How we find out 27? 12,000 divided by 447. So 27 setup come, multiply by 200. So 5,400. Then we have to work out carrying cost. What is the carrying cost? Like EBQ, EOQ. Here, same principle. Average quantity multiply by carrying cost. So what is the average batch quantity we hold? 448 divided by 2. So we hold 224 quantity on hand. So average inventory is 224 and per item holding cost means carrying cost is 24 per annum multiplied by 24. So this is the 5367. 5367 plus 5,400. So total cost 10,776. Now instead of 448, we assume we will take 3,000. Then what happens? So how many setup is required? 12,000 divided by 3,000. So 4 setup is required. And per setup 200, per setup 200 cost. So setup cost 800, only 800. But what is the carrying cost? 3,000 divided by 2, 1,500 multiply by 24. So it amount 36,000. 36,000 is the holding carrying cost. So 36,000 plus 800. 36,800. What is the additional cost? We have to bear 36,800 minus 10,776. So 26,000 is additional cost. This kind of example they can ask. Now take one simple example, then we switch over to book example. Now write down annual demand 24,000 units. Setup cost rupees 100. Setup cost rupees 100. Carrying cost rupees 2 per item per annum. Carrying cost rupees 2 per item per annum. What is your advice when we want to produce 3,000 units batch, 6,000 batch, or 8,000 batch? Which batch is economical? 3,000, 6,000, or 8,000? Work out. Annual demand is 24,000. Setup cost rupees 100. Carrying cost rupees 2 per item per annum. What will be advisable to go for 3,000 batch, 6,000 batch, or 8,000 batch? Try. Now complete this. Now what we will look? We have to take decision based on total cost of setup cost plus carrying cost. In the case of 3000, what will be the setup? So 24,000 is annual demand divided by 3000. So 8 setup are required. If you take the batch of 6,000, 4 setup are required. If you take the 8,000 batch, 3 setup are required. So each setup cost is 100. So it is 800, 400 and 300. That is the cost. Now, second, what is the carrying cost? So carrying cost means average inventory multiplied by carrying cost per annum. So in case of 3000, average inventory 1500. 3000 divided by 2, 1500 multiplied by 2, 3000. So total cost 3800. In case of 6000, average inventory 3000 multiplied by 2. 3000 multiplied by 2. So what will be the 6000? So total 6400. And in case of 8000, divide by 2, 4000 into 2, it's 8000. So 8300. So definitely 3000 batch is advisable. Now open your study note. I say the example. Example number, page number may be different, but the example may be same. So solve this problem. Example number 9. AB Limited is a committed supply of 24,000. Solve this problem. Very good problem. Problem number 9. All the points are covered here. Take this problem. Solve the problem number 9. You will read your own way. Then I will discuss this answer. Now look to this problem. We will solve it. Very important problem. You may first find out the EBQ as per the formula 2AS divided by C. A means annual demand, which is given 24,000. 2 means 2. And 324 is given setup cost. And 10 paisa per month per bearing. So multiply by 12, it amounts 1 rupees 20 paisa. So first question is very clear, 3600 is EBQ. Second point, what is the minimum inventory holding cost? Means carrying cost. So what is the carrying cost? Simple. 3600 divided by 2 average inventory multiplied by 1.20 paisa. So inventory holding cost minimum 2160 rupees. Now third question is more important. Instead of 3600, if you take 6000, what will be the answer? So in 3600, answer is very clear. What is the setup cost? 24,000 divided by 3600. These are the number of batches. So 24,000 divided by 600. So batches are required. 24,000 divided by 3600. Number of batches required 6.66. But you consider 7. It is not possible 6.66. So 7 into 324. This don't consider this answer. You have to answer like this. So 2268 rupees setup cost. What is the inventory holding cost? That is amounts to be 2160. 36 divided by 1800 into 1 rupees 20 paisa. So these are the 2200 plus 2100. This is the for EBQ level. If you take 6000, so how many setup required? 4. 4 into 324. That is the setup cost. And if you take the base of 6000, average inventory 3000, 3000 multiplied by 1.2, and that amounts to be 3600. So 3600 plus the setup cost, this is total cost. This example is very well. Now we switch over to next topic, that is called a contract costing. Very important. Contract costing is a very easy topic. Very easy. You cannot imagine such a easy topic, and that is the contract cost. In this contract cost, you have to find out 1 or 2 items. Rest you know very well, better than any other. Contract costing means what? You will find out the contract cost, particular contract. A company takes several contracts in a year, 1 to 100, whatever may be. And you must know what will be the profit of that contract. Only difficulty is that the contract may not be complete in a financial year. So you cannot take the profit completely as a contract profit, because uncompleted part will carry over for next year, and may be possible you may be incur loss. So here only 3 points are important. Number 1, when contract is not completed, what revenue you should consider? Point number 1. Point number 2, when contract is not completed, you cannot take the entire profit as a profit and loss. Number 2. And number 3, what is the effect on the balance sheet? 3 points we will study. The first point is, what is the revenue you will take? If contract is 100% complete, there is no questions. Contract is 20 lakhs, contract is complete, you consider 20 lakhs, expense is 15 lakhs, 5 lakhs is profit, matter close. But this is not the point for the exam. Contract is not completed. It may be at any stage, 10%, 20%, 50%, 80%. So what to take? Here, instead of complete the contract, entire amount is work in process. And work in process divided in 2 parts. work certified and work not certified. Work is done. Your contract is 20 lakhs, 14 lakhs work is completed, 70%. But this 17%, you say complete, but it has got to be certified by engineer. And engineer certified only 8 lakhs. So you have to consider 8 lakhs. So 8 lakhs is work certified. And remaining part is not work certified. And total it may be 14 lakhs. So there are always two parts, work certified and work not certified. That is the work in process. Now, in debit, all the expense you will debit, and whatever the material lying, plant lying will be credited. And you will find out the difference. That is called a profit. But here in special term, it is called a notional profit. Out of this notional profit, you may carry to profit and loss some amount, and some amount you will reserve. That is the second point. Formula is already there. If the contract completed less than 25%, entire amount is reserved. So 0 profit and loss. If it is between 25 and 50, the formula be applied like this: notional profit multiplied by 1/3, multiplied by cash received divided by work certified. If it is exceed 50 but less than 100, instead of 1/3, 2/3. If it is 100% complete, entire profit is profit and loss and reserve is 0. So that is second point. And third point, when you prepare the simultaneously balance sheet, you will show work in process minus cash received minus reserve profit. These are the 3 points. These 3 points are important. And second type of example, when it is not completed and next year complete, how to carry forward. These are the second. That is the end of the topic. Now take one example. We will take one example and then we will switch over to our study material. One simple example I will show you so you understand all the points. Write down this example. Contract cost 50 lakhs. Sorry, contract price rupees 50 lakhs. Contract completed 70%. Contract price 50 lakhs, contract completed 70%. Cash received 20 lakhs. Cash received 20 lakhs. Work certified. Work certified 25 lakhs. Work certified 20 lakhs. Material cost 10 lakhs. Labor cost 2 lakhs. Overhead 2 lakhs. Material lying at site 3 lakhs. Plant sent to site 10 lakhs. Plant lying at site 9 lakhs. These are the things. Prepare the contract account and balance sheet. The fundamental questions. Prepare the contract account and balance sheet. So we prepare the contract account. This is a very important example. Most of the points are covered in this example. So prepare the contract account and balance sheet. First we prepare the contract account. So contract price is 50 lakhs. We cannot put 50 lakhs because 70% contract complete, but we cannot take 35 lakhs. We have to work out work certified and work not certified. So put work certified, credit side. Work certified is 25 lakhs. Put the figure work certified 25 lakhs. Then work not certified, which is not given, we will find out. Very important point I will discuss. But put the figure work not certified. Now put the all expenses on debit side. Material 20 lakhs. Labor 2 lakhs. Overhead 2 lakhs. Material lying at site on credit side. Material lying on site 2 lakhs. Plant sent to site, debit side 10 lakh plant. And plant lying at site 9 lakhs. These data are given. Now we find out the notional profit first. How to find out? Simple. We don't have a work not certified. That find out the first. So what is work not certified? Work completed 70%. Work completed 70%. And 70% means 35 lakhs. And work certified only 25 lakhs out of 50 lakhs. So 50% work certified. Understand? Contract price 50 lakhs, completed 70%, but work certified only 25 lakhs, means 50% work certified. So work certified 50%. What is not work certified? Remaining 20% work is not certified. So write down work not certified 20%, total 70%. Now, what is the cost of 70% that find out? What is the cost of 70% that we work out? So 20 lakhs material, 2 lakhs labor, 2 lakh overhead, and 10 lakhs plant. So 20 plus 2, 22, 24, 34. Minus 2 lakhs material and 9 lakhs, 11, so minus 11 lakhs. So 23 lakhs is the cost of 70% work got completed. Understand, very important point. Total cost incurred is 23 lakhs for 70% of work completed. So 50% is already certified. So balance 20% is not certified. So what is the cost? 70% equal 23 lakhs. So what is not certified? 20%. What is the cost of not certified? That we have to find out. So 23 multiply by 20 divide by 70. So work not certified is 6,57,000. Again, the total cost is 23 lakhs for 70%. So 70% 23. So what is for 20%? So 23 into 20 divide by 70. So 6,57,000. Sorry, 6,57,142. એટલે 6,57,142. That is the amount of work not certified. Now, total of this. So credit side total is 25 lakhs, work certified. 6,57,142 was not certified, and 11 lakhs lying with us. So total this side is 25 plus 6.7 plus 11, 42 lakh 57,142 minus debit side 34 lakhs. So the profit, notional profit will come 57,142 minus 34 lakhs. So 8,57,152, that is the notional profit. And if this is the notional profit, we have to apply the formula. How much work is completed? 70%. So application of 2/3. So notional profit multiply by 2/3, multiply by cash received 20 lakhs, divide by work certified 25 lakhs. This is the very important part. So 8,57,142 multiply by 2/3 multiply by 20 lakhs divide by 25 lakhs. it will become like this: 1.4 into 66.67 into 20 divided by 25. So 4,57,000 that will be transferred to profit and loss account, and balance 3 lakhs remaining reserve. These are the very important aspects of the contract account, and this is they ask. So in this case, work not certified is given, and you have to find out. Very clear. Attempt again such small problem before we switch over to the study note. Write down a one simple problem. Contract price 10 lakhs. Contract price 10 lakhs. Work certified 4 lakhs. Work completed 6 lakhs. Work completed 6 lakh. Sorry, work completed 60%. Contract price 10 lakhs. Work certified 4 lakhs. Work completed 60%. Cash received 2 lakhs. Cash received 2 lakhs. Cost material 1 lakh. Labor 1 lakh. And overhead 1 lakh. Find out the profit carry forward for profit and loss account. Point amount detail I have not given much, but concepts you have to be very clarify. Look to this. You try your solve in 2 minutes. I will solve it. Tomorrow we will go for more problem on this because this is very important chapter. But this fundamental you have to understand how the contract accounts are operate. Try this problem. In 2 minutes I will solve this.